Hey traders, this is Blake Morrow with Forex Analytics, and you are listening to the week ahead video for February 12th, 2023. Now, before I go on, I need to warn you, if you are a man and you are listening to this right now and you have a Valentine, you best stop after this video, go get some flowers, some chocolates, and make sure you get a nice card for that special person in your life. All right. And also I wanted to say, hey, we have a really big week coming up. We have CPI coming up this next week. The market has consolidated as we expected last week, and we're getting ready for a big move. I'm going to share with you today my setups for the dollar, different cross rates, gold, the S&P, what I think is going to happen, and more. So make sure you do stick around for this through this entire video. And I need to also mention, if you haven't tried out Forex Analytics, this is the perfect time to do so. You can be involved in the most active trading community pretty much on the planet. Make sure you check us out. It's only $1 for 10 days. Download the mobile app. There's not very many companies that will give you a mobile app, access on your mobile device, and technology analysis, support resistance level breaches, alerts, pop-ups, all on your mobile device. So that's included with Forex Analytics. So make sure you just test it out, download the mobile app while you're testing us out, and check us out today. All right, this is the Forex Analytics application. It's being updated through the weekend because everything is manual. We don't have automated analysis. This is all manually done by our team, but we have a lot of tools inside the system. So make sure you check out, the live squawk feed, all the analysis, how to get there, all the different charts, all the Elliott wave analysis, the harmonic analysis, all the fun stuff that's included with Forex Analytics. But I'm actually going to go into live charts because we're going to talk about, well, let's go to the S&P first and foremost. And I'm actually going to go to a different chart. I have a couple S&P charts that I follow. This is the one that you've seen the last 2 week ahead videos, right? We were looking for a move to 4,200. Look at the blue line. This is what I drew out 2 weeks ago. You can see it, right? So we expected a move to 4,200. It happened, and we've seen the reversal. Last week, we said this would be a consolidation week. It is. And with this consolidation week, the thing that I have to say is the market, in my opinion, is really preparing for this week's inflation data. I've heard a lot of arguments, guys and gals. I've heard both sides of the argument. Whether we're going to have continued resurgence in inflationary pressures. I've seen a lot of the revisions. I've also heard the arguments, the deflationistas, if you will, and people that believe that inflation is actually going to succumb and fall towards the Fed's mandate of 2% here this year. I've heard both ends of the spectrum. I've heard every argument. And you know what I have to say about that is I don't think the market knows, and that's why we consolidated last week. I think if the market had a good handle on which direction that we were confident we were going to go, and they knew what the Fed's next steps were going to be as a result, we would have seen an explosive move this week. But because we're kind of in this range here, I think that it prepares us to have the ability to have a big reaction following Tuesday's inflation number. So let me say that again. Tuesday's inflation number will probably produce a very big move in the market, and we need to be prepared for either action. Look, I plan on going into Tuesday flat, meaning that I don't plan on having a position. And matter of fact, I want to say this. We had a guest scheduled on our live show that we do free every day. If you guys don't know how to get to that, go down to the description of this video or go to forexanalytics.com, go to where it says webinars. We have 2 free shows. We have the Flow show, which is the European show. We have 3 of our teammates, all 3 of them ex-bank traders, floor traders. They broadcast for free every day. And then we have our F.A.C.E show where the rest of our team will join in for the North American show. We will be covering CPI live on Tuesday. And we don't have a guest that we usually do. We usually have a guest every day where Dale Pinkert interviews somebody. that you see on CNBC or Bloomberg or Reuters. And, we have a long extended interview for free for you guys, but we don't have an interview scheduled for Tuesday, so we can actually follow up on our analysis live in the market. So make sure you're there on the F.A.C.E show on Tuesday. Okay, back to the analysis. Like I said, I've heard both arguments. S&P is consolidating, and I think that the S&P and the rest of the market is just poised and ready to move. So let's talk about it really quick. If we have inflation that comes in, below expectations, the market's going to love that. The market's going to love that because the market's going to feel that, the Fed won't have to be so aggressive. They don't have to be aggressive in continuing to raise rates. Inflation is coming down. So that's going to be a good thing for equities. Inflation lower, revisions lower, prints come in below expectations. We should see a rally in equities. We should see that S&P challenge the 4,200 level resistance. Here, let me just go ahead and draw this out for you guys. Okay, this is the range, by the way, just so you all know. 42. We should challenge the 4,200 level resistance in the S&P and potentially break out. Now, if that inflation data comes in line with expectations, hotter than expectations, and or revisions are revised higher, meaning inflation is kind of sticky, the problem is the Fed is going to aggressively, along with other central banks. If you missed all the central banks that met this last week, we had Banxico, RBA. Oh, who am I missing? I'm missing one other. Somebody can fill in and tell me what that is. But we had a few central banks. They were hawkish this week. So if inflation pressures are hot, or revisions are hot, or even in line, people will believe that the Fed still has further to go with their rate hiking campaign, and the S&P should break below 4,000, and we might challenge some support. So do you see that highlighted area, that box that I drew out for you, 4,000, 4,200? That's roughly, our range. Guess where we closed on Friday? 40.90. That's in the middle of the range. Most of you that listen to me live every day know that before a big piece of data, if the market just is not convinced one direction or the other, we go mid-range. We happen to be mid-range right now at 4,100 in the middle of the 4,200 to 44,000 range in the S&P. Do you know which way the market's going to break? I mean, you might have your opinions. We all do. I think inflation is going to be sticky. I think stocks are going to come under pressure. That's what I think. But just because I think that doesn't make me right. And just because you think something doesn't make you right either. Right? Correct? Okay. So it's important, I think, in this week's, especially this week's inflation data that could really, really alter how the Fed is going to approach monetary policy in the months ahead. We have to all be ready to react following Tuesday's data. And by the way, that's not the only thing that's happening this week, but in my opinion, it is the most important thing. So let's talk about the dollar. And then I'm going to talk about some specific currencies. And then I'm going to talk about gold. And then I'm going to talk about, probably the bond market too. The dollar index. What do you guys see there? Well, look what's highlighted in black. Let's just go ahead into a 4-hour chart and you can kind of see it intraday. That's what we call a bull flag pattern, right? And I'll say we close at the top end of the pattern. You can kind of draw it however you want to draw it. But if you take that black line right there, that is a bull flag pattern, meaning that's a bullish continuation pattern more than likely. Now, that means the risks are tilted at this point that we break higher. But are we going to break higher? I don't know. I mean, can we, or can we go the other direction? Sure. Weaker inflation data, the dollar's going to fall. The dollar will act accordingly, meaning in tandem with the data. So strong data, strong dollar, weak data, weak dollar. Okay. We have a bull flag pattern that's intraday. But if you look at the daily chart, a few really key things are happening right now in the dollar index. We are at channel resistance. So I'm going to just give you a number really quick. You can jot this down if you want. 104 is key resistance for the dollar index. If we have strong inflation data, we break 104. Not only does it kick us off with our bull flag pattern, which means we'll probably target around 106 roughly. But we break channel resistance, that's 2. We break the 618 retracement, that's 3, which the 618 retracement right now comes in right around 103.80 something, 103.83, and it's not drawn perfectly. So roughly, technical analysis is like horseshoes and hand grenades. Close matters, right? So we're okay. Channel resistance, 618 retracement, flag pattern, break above 104, it's bullish. Now, if we break back below that flag support, which comes in roughly around 102.50, 102.60, that means that the bear trend is about ready to continue, and we are going back down in this channel resistance. That means the 618 held, channel resistance held. Weak inflation data will be strong for stocks, weak for the dollar. The dollar should drop right back towards 101, towards channel support. You guys got it? 102, 102.50, 104. There's your playbook in the dollar. Do you know what's going to happen? Are you going to prepare? Are you going to take a trade ahead of the news because you know more than somebody else? If so, kudos to you. Good luck. All right, next, let's move over to some dollar pairs. All right, so here's the euro. The euro is already showing us signs of weakness. Now, that's a problem if you are a dollar bear, because we're seeing the euro already start to break down. We start breaking through yesterday, last week's lows. We're going to see a breakdown because we're already below the 618 retracement. We're already below channel support. So think about that if you're a dollar bear. Okay. Sterling, we're setting up with the double top. I think it's self-explanatory. 200-day moving average, really key support. We start breaking below that, it turns bearish. But the flip side is weak data, stocks go up, dollar goes down. We can just be in a range, right? We can just be in a range here. Maybe we'll challenge that 124.50. Look, there's a lot of beat from macro beat. He said it a certain way that it makes a lot of sense to me. A couple of weeks ago, not regarding this data, but regarding, I think it was the FOMC or something like that. There's a lot of runway no matter what happens this next week. So if the data is weak, and the dollar starts to weaken, there's a lot of money to be made in that direction. If the data is strong and stocks come down and the dollar rips, there's a lot to be made, in that direction as well. So I think there's going to be a lot of opportunity following the data. You don't have to necessarily try to, flip a coin and get into a trade ahead of the data. You know what I'm saying? I hope that makes sense. All right, a couple other pairs that I do want to point out. One, if you listen to the daily shows, you guys know it's near and dear to my heart. The Swissy. Look, I bought it this week. I want to say on Thursday. I spun out of it, but most people in the Forex analytics community knows that if the data is strong and we see some dollar reversals, I am looking for the US dollar Swiss franc to rally back towards the 200-day moving average, and I want to be fairly aggressive with this move on a dollar strong move. Dollar breakout bullishly. The Swissy, we did a little false breakdown a couple of weeks ago. We are at channel resistance. We're at the 50-day moving average. We break above this. We call it 93 cents roughly. We break above 93 cents. That's really bullish. That's something that's on my radar. It's on my front burner. Whatever analogy you want to use. Dollar yen. There's a lot happening here and a lot to unpack with the dollar yen, especially with the new BOJ governor incoming. I'm going to be staying away from the dollar yen, but I'm going to technically just point out we are outside of a channel. We held the 618 retracement, which came in roughly around 130, and you can see the dips down to 130 are holding. So, would it surprise me to see the dollar yen rally back to the 200-day moving average before it rolls over again? It wouldn't. But I think there's other moving parts with the dollar yen, with an incoming BOJ, candidates that are coming in, and who the eventual new BOJ governor is going to be to take Kuroda's spot. So there's a lot of moving parts, something I'd rather just not deal with personally. I hope that makes sense to you guys. Okay, so next what we're going to do, since we looked at the S&P, we looked at the dollar, next we're going to be looking at gold, and we're going to be looking at the bond market. However, before I continue on, I must say this. First and foremost, if you haven't checked out the If you haven't checked, excuse me, let me go over to the trader funding program. Make sure you do so. All you have to do is go to forexanalytics.com, click on this button right here. Just at the very end of this week, we had 2 traders pass their assessment and their live accounts got funded on Friday. The 2 of you that you guys know who you are. I don't need to mention your names. Congratulations. They are now officially trading our company's account. So if you want to learn how to trade our money and not risk your own money, the trader funding program may be a great opportunity for you. If you receive our newsletter this weekend, make sure you check out the video from Nick of Jupiter. He has failed a couple assessments. He has passed a couple assessments. He's also received a very large payout from us at the end of last year. He made a video specifically for you talking about what he did to pass the assessment in the trader funding program through our company. He talks about, what are the pros and cons of going through a trader funding program and prop trading. So make sure you check that out. Remember, to receive our newsletter, all you have to do is go over to forexanalytics.com. You can go right over here you could even go to where our blogs are, and you can see you can get, right on our mailing list right here, subscribe to the newsletter and get our weekly newsletter that goes out for free. Check that out. You can also, when you go over to the blog, you can see this is the video right here. Is our trader funding program right for you? And then you can see Nick from Jupiter is right here. You can watch his video right here. All right. And that was produced by Nick. So check it out. And he's not part of the Forex Analytics staff, but he's been listening to our videos and, for like the last 6 or 7 years. So make sure you check it out. Okay. But let's go back to, I wanted to talk about gold. So gold is a big deal to me because gold is going to be that asset that I'm watching through one eye, as I go cross-eyed. No, I'm going to be watching through my periphery during the CPI because gold is going to confirm what I'm doing in the dollar. Remember, in this situation, gold and the dollar are inversely related, inversely correlated, almost 1-to-1. Almost 1-to-1. That means that if the dollar is going up, I expect gold to be going down, and vice versa. The problem that gold has at this moment is we have, and I'm just going to draw this out for you. Gold has what we call a throwover. That's Dale's famous throwover. You're in a channel, right? You're in a channel. You break out of a channel, but you can't sustain the break. When you fall back into the channel, the chances are that you now have a breakdown ensuing. With that being said, what you'll notice is gold has stopped right at the previous channel support. So if we start breaking below 1850 in spot gold following the inflation data on Tuesday, then we're going to get a breakdown probably back towards the 200-day moving average. Now, if gold can hold up and reverse, following the data and gold's going higher, I know the dollar is going to be breaking down. But based on what I told you and I showed you over those, few currency pairs, you kind of know where to focus if the dollar does break down, right? Go back and rewatch the last 10 minutes. All right. Last but not least, I want to cover the bond market because the bond market really is kind of telling us something at the moment. We're seeing bonds sell off. Yields are going higher, right? We've had big rejections of the 200-day moving average and the 10-year. We've broken this ascending trend line. You guys can see it right through here. And to me, it looks like the bond market's got further to go. If the bond market does have further to go following Tuesday and we see bonds sell off, that means yields are rising. Yields are rising because people are expecting the Fed to continue to raise rates. That means that the inflation data probably was strong. The dollar is strengthening, gold is weakening, and bonds are weakening. Yields are going higher. That's something else I'll be watching on my screen as I'm trading currencies. Now, I know there's a lot to unpack, and I know this is a fairly short video, but I want to thank you all for listening in, every week. I hope these videos are productive for you and they help you plan your trades going into the next week. If they are beneficial to you, I'm going to ask you, please give us a thumbs up for doing these every week on the weekend for you. Subscribe to the channel so you don't miss any of these great interviews that we do throughout the course of the week that are free. Our analysis throughout the week that are free are on our channel. And then also these week ahead videos. And also, I want to say that there are a few other things that are happening this next week, but we have retail sales in the US, we have employment data out of Australia, we have producer prices on Thursday, so there are things that are going to be moving, but first and foremost, the first thing that's going to be affecting the markets is Tuesday morning is going to be the CPI data in the US. The market is highly anticipating this data, and we will be covering it for you live on the F.A.C.E show. So make sure you're registered and you're there for that free live event. I'll see you there with the Forex Analytics team. And I want to say thank you all for spending your time with me. Enjoy the rest of your weekend. I'll see you on Monday morning, actually. Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.